There are fears that new problems surfacing in the US housing sector could unleash another wave of global upheaval. America's mortgage servicing industry is accused of using fraudulent documents in thousands of foreclosures. A number of banks have halted foreclosures around the country amid allegations that they've committed mortgage fraud. The latest information on Australia's housing sector suggests the industry won't be exposed to the same pressures unless the economy slows beyond expectations. Here's finance correspondent Philip Lasker.
Some of America's biggest names have come under fire for their loan practices. There are allegations of forged documents and mortgages sliced and diced so many times that nobody really knows who owns them.
The bank that was suing me was HSBC Bank as trustee for a trust, but that wasn't the bank that I had my note with and my mortgage.
Jeff Miller successfully sued his bank, and it raises serious questions about the legality of foreclosure proceedings.
When you do a foreclosure and you're signing these affidavits, when you file any legal document, you have to have personal knowledge. None of these people have personal knowledge of the actual note, and nobody does anyways, because no one knows where the original note is or how many times it was transferred.
Lawmakers are attempting to determine the scale of the problem. The banks say the problems are purely technical and most foreclosures are genuine. The last thing they want is a flood of court cases reversing foreclosures at a cost of billions of dollars. They're also resisting reducing the principal on mortgages.
They lowered my mortgage $1,000, and they gave me an interest from 8.1 to 2%. So I feel I am blessed.
More likely that these paperwork problems are going to cause a delay, which will let people stay in their homes a little longer, but it's really just delaying the inevitable because the overwhelming majority of these folks are unfortunately going to get foreclosed on anyway.
Credit ratings agencies, which played a major role in America's housing disaster, are now looking for more accurate indicators of property distress. Moody's announced a regional rather than a postcode approach to analysing mortgage delinquencies in Australia. It concluded Australia did not have a serious problem, but as the red areas show, a region of Western Australia and areas around Sydney where more than 2% of borrowers failed to make one or more monthly payments are seriously affected. But Moody's doesn't see any significant deterioration in the foreseeable future.
We may be looking at more in the region of 4 years out before that real significant risk hits the market.
That's after interest rates peak at 8 or 9%. But in the meantime, BIS Shrapnel is predicting reasonable growth in house prices for most capital cities over the next 3 years, with Perth and Sydney recovering recent losses. Some of the slower-growing capital cities like Darwin and Melbourne will be hit by affordability constraints after strong price rises.
There will be a pickup in demand with first home buyers and even investors over the next 3 to 6 months, and that will provide a support for the market. And let's not forget there's substantial pent-up demand out there, and while that pent-up demand there, that is providing significant support to prices.
BIS Shrapnel doesn't see any rude property shocks while the resources boom continues.